Good evening, everyone, and thank you for joining us on Varun Beverages Q3 and 9M 2018 earnings conference call. We have with us Mr. Ravi Jaipuria, Chairman of the company, Mr. Varun Jaipuria, Whole-Time Director, Mr. Raj Gandhi, Group CFO and Whole-Time Director, Mr. Kapil Agarwal, CEO and Whole-Time Director, and Mr. Kamlesh Jain, CFO and Whole-Time Director of the company. We will initiate the call with opening remarks from the management, following which we'll have the forum open for a question and answer session. Before we begin, I would like to state that some statements made in today's call may be forward-looking in nature, and a detailed statement in this regard is available in the results presentation shared with you earlier. I would now request Mr. Ravi Jaipuria to make the opening remarks.
Good afternoon, everyone, and thank you for joining the call. I hope all of you had the opportunity to go through our results presentation, which provides details of our operational and financial performance for the third quarter and 9 months ended 30th September 2018. We are happy to report another strong quarter with revenue growth of 21% year-on-year and a net profit growth of 31% year-on-year in quarter 3 2018. This was on the back of robust volume growth of 17.2% and value growth of 3.8%. Strong organic volume growth momentum has continued in India at 9.3% in quarter 3 2018. Despite marginal impact on account of shift of the festive season this year to quarter 4. We are enthusiastic by our performance this year as we have reverted to our historical growth trends. For the 9 months ended 30th September 2018, revenue grew 24% year-on-year, led by robust volume growth of 19.8%, value growth of 4.5%, was driven by better portfolio mix with the introduction of higher realization products like Sting and Tropicana. Our India business has delivered organic volume growth of 11.7% during this period on the back of strong peak season sales. PAT increased by 31% year-on-year, driven by strong volumes in India as well as in international operations. The demand environment continues to be robust. We are on a strong footing and proceeding as per our strategic roadmap. On driving profitable growth, we will be focused on unlocking value from the recently acquired under-penetrated sub-territories in India by strengthening distribution and installing visi-coolers. The acquired sub-territories provide huge opportunity for driving volumes, gaining market share, and see significant operation leverage going forward. Further, our customer-centric approach, new product innovations, and ethnic flavors in the fast-growing juice segment and the Tropicana juice portfolio augur well for our long-term prospects. We have a strong balance sheet and sufficient capacity in place, providing significant scope for growth on existing investments, resulting in robust cash flow generation. I would now request Mr. Gandhi to provide highlights of the operations and financial performance. Thank you very much.
Thank you, Mr. Chairman. Good afternoon and a warm welcome to everyone for joining the investors call. Let me provide an overview of the financial performance for the third quarter ended 30th September 2018. Revenue from operations adjusted for excise GST grew 21% year-on-year in quarter 3 2018 to rupees 11,657 million. Total sales volume were up 17.2% year-on-year at 77.5 million unit cases in quarter 3 2018 as compared to 66.1 million unit cases in Q3 2017. Further, the introduction of high realization products and reclassification of freight cost instead of netting off from revenue have resulted in 3.8% value growth during the quarter. Growth momentum continued in India with strong organic volume growth of 9.7% in Q3 2018, despite marginal impact on account of shift of the festive season this year to Q4. Gross margins remained stable year-on-year at 54.8%. EBITDA increased by 14% to rupees 2,112 million in Q3 2018 from 1,854 million in Q3 2017. Underlying EBITDA margins have improved in existing as well as recently acquired territories on the back of operational efficiencies, increase in organic volumes and consolidation of contiguous territories. However, blended EBITDA margins reduced by 113 basis points year-on-year to 18.1% due to suboptimal volumes, margins in the acquired sub-territories, and contribution from the Tropicana juice portfolio, where at present we only have a supply and distribution arrangement and we are not manufacturing the product. Further, depreciation has increased 13.7% year-on-year during the quarter on account of inorganic expansion. The robust volume growth in India as well as in international operations has resulted in 31% year-on-year increase in profit after tax to rupees 442 million in Q3 2018 from 337 million in Q3 2017. At this point, I would like to point out once again that it's the best to monitor the business on an annual basis given the seasonal nature of the business. In terms of the performance for the 9 months ended 30th September 2018, revenue from operations adjusted for excise GST grew 24.3% year-on-year in 9 months 2018 to rupees 43,196 million, led by robust volume growth of 19.8% and value growth of 4.5% approximately. During 9 months 2018, CST constituted 77%, juice 6%, packaged drinking water 17% of total sales volumes. EBITDA grew 19.4% to rupees 9,588 million, while net profit expanded 29.5% to 3,707 million in 9 months 2018. To conclude, this has been another strong quarter for us. We have demonstrated strong cash flow generation, working capital efficiencies, and are well capitalized to sustain our growth momentum in the years ahead on the back of our robust ecosystem, enhanced product portfolio, and ability to drive growth and garner market share. On that note, I come to an end of the opening remarks and would like to now ask the moderator to open the lines for the Q&A. Thank you. Thank you very much.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who has a question at this time, please press star 1 on your phone. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have the first question from the line of Anand Shah from Axis Capital. Please go ahead.
Yeah, hi sir. Congratulations on a good set of numbers.
Hi, Anand. How are you?
I'm good, sir. And great sustained delivery essentially on the performance. So congrats there. Just few questions. One is, can you also highlight this organic consolidated growth in terms of volumes? You've given the India organic growth.
That's right. The international organic growth is 8.5% for the total period, and Q3 is 5%.
Q3 is 5%.
Yes.
Yeah. So any particular reason slowdown? I think last quarter you highlighted Sri Lanka, the tax rate thing and all also. So how has the international performance been?
Sri Lanka now is, the slowdown has been arrested, which used to be about 30 plus. Now it's under 20% and should further be, put under control by this quarter, because we were slightly delayed in introducing zero calorie, zero sugar products. But something is heartening that there are no losses. We have brought the expenses under control, and it's again, profitable venture, even with the reduced volumes.
And how are these Africa, the Zimbabwe and Zambia doing?
Sorry?
Zimbabwe and Zambia doing? The Zimbabwe scale-up is going on well?
Yeah, Zimbabwe is doing well, and it has already reached a threshold volume of 10 million cases for making any, territory positive.
Okay.
And Zambia is, again, is doing as projected. And over the last years, its growth, if we take it apple to apple with in the domestic market, has shown 35.7% growth. Last year domestic versus this domestic.
Okay. Perfect. And on the domestic side, sir, what is your general take on the demand? I mean, you see the sustained recovery, especially in your markets in the north and east and the rural side. Things look fine on the demand side?
Should be there because the initiatives on the new launches had been quite overwhelming, and with the introduction of Pepsi Black and Sting, which already has become 2% of the mix, and the growth is continuously coming in these. So that should, the growth should be continuing in the near future also.
Okay. And just lastly on this drag on the EBITDA side slightly because of the stabilization new territories and Tropicana, when do you expect this to stabilize?
Well, I think by next year, once our plant is in production, which is March or April we are expecting, then I think the margins in Tropicana will change because at the moment, since it's being co-packed, we don't have margins. And also the new territories which we have taken are already getting stabilized, but by early next year, they will consolidate with our existing territories, and I think we will start seeing the same EBITDA margins in the new territories. So there will be a big change going forward next year.
Anand, as in the last call also we said we have already doubled the margin
yes,
at
exactly,
which territories were acquired. But still there is a lot of potential to grow, and also those territories, except Jharkhand, most of the territories are at 20-25% of the market share. So there is a huge potential to increase the market share, then the volume game will start into. And we have good, nice potential to enhance the margins and the market share.
So both essentially. Perfect. And just one last thing, if I may, are you seeing any pressure on gross because of the maybe on the higher fuel cost or on power and fuel, delivery, packaging in general? Because of the higher crude price?
There is always, every year there is something, either sugar is high or petroleum is high. Something keeps happening. But we normally, if the cost goes up by more than 5%, we normally pass it on to the consumer. So I don't think overall, as far as our EBITDA margins are concerned, we are not too concerned.
Okay, perfect. Thank you, sir.
Thank you, Anand.
Thank you. The next question is from the line of Kaustubh Pawaskar from Sharekhan. Please go ahead.
Yeah, good evening, sir. Thanks for giving me the opportunity and congrats for good set of numbers. Sir, coming back to operating margins question, we have seen that this year the margins are lower, and obvious reason is because of the consolidation and the lower margins of Tropicana. And you mentioned that consolidation will happen somewhere early in CY 2019, and also the new facility of Tropicana will be operational next year. Can we see CY 2020 should be a right year to, look from the margins perspective, like we can expect steady kind of margin expansion from CY 2020?
No, I think you'll see them even next year because all our new territories will get consolidated starting next year. So, which is a large chunk which will get added to our portfolio where we have not been able to consolidate this year. And Tropicana, at least 8 months or 7 months of the year, our own production will start. So I don't see any reason why it would go to 2020. We will see it started getting consolidating next year itself.
Okay, so margin expansion should be there from CY 2019.
That's right. It would be where we are, above 20%. So that's what we expect.
Okay. And Sir mentioned about working capital improvement in his initial comment. So can you throw some more light on it, whether you have seen any reduction in the working capital days, or, what kind of efficiencies, you are looking into working capital?
Yes, it's quite apparent. In fact, last year we had given a guidance when, working capital cycle used to be 29 days, that optimally we want this to be under 20 days. And during the season when, the half-yearly balance sheet was prepared, in fact, during the busy season when the volumes happened, everything was there, and it came down as low as 13 days. But we still, 20 days guidance for us, we have kept it, and we are absolutely on the track.
Okay. And suppose the consolidation of the territories, can we expect some more improvement in the working capital? Because post the consolidation, things would be more stabilized, and there might be more benefits at the working capital level.
I think at 20 days it's quite pre-optimum, and I think we can keep trying, and we will try. But I think to expect anything better than that would be quite difficult.
Okay. And so one last one on the date. Are we looking at reducing the debt, or the inorganic initiatives will continue, and there will be, the debt portion will continue to remain at the current level?
Debt, in fact, there was a very good improvement, in June, and we have already reached the debt equity of 1:1, which we have kept as a target for us. And debt to EBITDA itself also has come to 2.1 as against our what on the website 3:1 we have kept for ourselves. And further, inorganic scope, this keeps on happening. Last 25 years it had been, and, last year we could add some territories, and let's see what happens in the future.
Okay. Thank you. Thanks for the opportunity.
Thank you.
Thank you.
A reminder to the participants, anyone who wishes to ask a question at this time may press star and 1 on your phone. The next question is in the line of Bhavesh Shah from CLSA. Please go ahead.
Yeah, hi. Good evening, everyone. Sir, can you share some thoughts on your outlook for concentrate prices for 2019?
Well, concentrate pricing has been at 20% for the last 25-30 years, since we started this business. And it will remain constant, so I don't see any changes happening in that. If for any reason our prices go up, the concentrate price will go up, but it will remain at the same percentage.
Okay. And any thoughts on, with the recent increase in crude prices, how your petchem, how your, pet products, given you have large exposure to pet products, how is your input shaping up on that side? Are you comfortable, or you'll be required to take some price hikes?
No, as I said, we'll see, because this is like a seesaw. Every year something or the other happens. Crude prices are already starting to come down. PET prices have come down by over 10% in the last 1.5 months. So I think we need to look at by the year end what the final pricing is going to be. And if it really makes any difference in large terms, then we might look at taking some slight pricing. Otherwise, I don't see any major changes happening from last year to this year.
And Bhavesh, just to supplement this year, till the time the net effect, because whatever increase in petroleum prices are there, is compensated by reduction in the sugar prices. So net, if you see at gross margin level, this year margins have improved. So as of now, there is no challenge, but going forward, we will see, once we reach there.
Sure. Sure. Sir, secondly, on your Tropicana portfolio, what is the current margins you're making, and where do you expect these as you commission your Pathankot facility? If you can share some thoughts on that.
Well, currently we are not making much margins. I mean, it's basically we are making sure that because it's a huge freight we are paying, the products are coming from Baramati from towards western side and coming to east and north. But once we start production, we will have our regular margin like any other businesses. So.
Okay, and what is, if you can share some detail on what's your agreement with PepsiCo? Do you pay concentrate charges here, or do you have a royalty agreement? How does it work for your Tropicana portfolio?
It will be similar to what we are doing. It's in the finalization stage, and it's not finalized yet, but I think before the end of the year it will get finalized.
Sure, sir. So, and just coming back to your your base business and your for recently acquired territories, when do we expect margins for these territories to converge with our existing ones? Do we expect this to happen in the upcoming?
I just said in the earlier question also that we expect by next year this will consolidate with our existing territories, and we should be showing the same EBITDA margins.
Okay. Great. And sir, just one more last question on this new acquired territories. In the opening remarks, you mentioned that you intend to deploy more visi-coolers and expand your distribution network. So what are your market share in these territories? I'm assuming it's 20-25% across all the regions, or it's different?
It's different. Each state is different, and overall consolidated, we are, I think, at about 20%. So I think there is a lot of headroom, and we hope to increase our distribution and put more assets into the territory and go forward with it.
So if I'm not mistaken, your current count of visi-coolers is close to 400,000. So how many visi-coolers you intend to deploy in these new territories?
I don't think I would like to disclose that at the moment.
Sure. No problem. Perfect, sir. Thank you very much. All the best.
I think the volume is more than 500,000 pieces.
Okay. Sure, sir. Okay, no problem. Thank you.
Thank you.
Thank you.
The next question is from the line of Vicky Punjabi from JM Financial. Please go ahead.
Hi, sir. Thanks for taking my question. Just one, I just want a clarification on the CSD part of the portfolio, because there the growth seems a little lower at around 11%. We are doing around 16 to 18% of the past 2 quarters. Is this purely because of the festive season, or are we seeing some other effect out here?
No, it is definitely related to the festive seasons. Our growth last year, because the Shera was in September, it does make a big difference, especially in our eastern portfolio, and which we will see the upside on in October, which is already pretty well finishing. So we will see that already. We see that already coming in the 4th quarter. So, and also what happens is, as the peak seasonality gets over, water and juice have less seasonality. So you always see more water in the non-peak season months.
Okay, sir. And sir, just one more thing on this capex bit. So I just wanted to know how this Pathankot capex will kind of work over the next year, and when will the facility be finally ready?
Well, we had projected, we are on track on what we had projected. There's not much gap in what we are going to spend. And the plant, we are expecting it to be ready by March, latest by April, not later than that. We hope to be actually in production by March.
Okay, sir. And sir, the total capex expected was 450 crore, right?
Yeah, total capex was expected to 450 crores.
Okay, sir. Okay,
that's correct.
Yes, thank you so much, sir.
Thank you. Anyone who wishes to ask a question at this time, please press star and 1 on your phone. Anyone who has a question may press star and 1. The next question is from the line of Kuldeep Gangawar from ASK Investment Managers. Please go ahead.
Sir, this capex of 450 CR is for CY18 only? Or?
This is for season 19. So what happens is some part will be in this year, but that will be capital work in progress. Capitalization will happen in 2019 only.
Okay.
But this is composed total for the plant to be operational.
For this Pathankot plant you're talking about.
That's right.
Okay. And Nepal bit, like you did the expansion in recent times, so how the pickup is happening over there?
No, Nepal is good. I mean, the plant is operational and we expect good results coming from it by next year because the plant only got operational by middle of the peak season, so I think the real benefit of that will only come next year.
Okay, sure. Sure. Thanks a lot.
Thank you.
Thank you. Anyone who wishes to ask a question may press star and 1 on your phone. As no further questions from the participants, I now hand the conference over to the management for closing comments.
Thank you very much once again for your interest and support. We will continue to stay engaged. Please be in touch with our investor relations team for any further details or discussions. Look forward to interacting with you soon in person. Thank you. Thank you very much.